Good evening, all. It is Sunday night. Shay Horowitz, ShogunTrading.com. This is a free weekly newsletter. I want to talk a little bit about the market. These are unprecedented times in a way, but in a way they are not. I'm going to start off with a chart of the NDX, the NASDAQ 100, top 100 stocks in the NDX. This is the bubble, the big internet bubble. You can see that the top was 4,800, 4,816, and then we took a dive all the way down to the 800 level, 818. So quite the dive. Percentage-wise, we lost 5-6 of our value, basically. A tremendous dive. It has happened before. It happens. Bubbles happen. Bubbles burst when there's a crisis of confidence. When all of a sudden there's a panic. There's frustration and there's panic, and everybody just lets go, and people become so panicked that they just absolutely exit everything. The fire sale everything. So that's what happened in the internet bubble. And by the way, it's when the last president came out of office. That's what happened. It was also a crisis of confidence. So that's what's basically going on right now. The NDX came up to the 2239 level, and now we're sitting at 1200. So we basically lost half the value of the NDX over the last couple months. Not as big as this one, of course. I want to show you the S&P 500. S&P 500 is very different than the NDX, because the NDX was a bubble back then, and you can see how much it came down. S&P 500 actually made a new high, and now it's coming down. The high over here was 1570 or so, 1600 or so, and we're down to 876. Quite a bit of a dive. We're working on the 50%. Notice that the 200-month moving average, the red line, is something that we penetrated right now. I don't remember the last time we penetrated it, which is pretty interesting, but my data doesn't go back that far. Interesting. It's a double top long term. Who knows? Dow Jones Industrial Average, same thing. Also, notice that we did make a new high, went all the way up to the 14,000, almost 14,200, went all the way down to 8,300. And this is what people are focusing on. People are focusing on the Dow Jones Industrial Average, which is only 30 stocks. That's all it is. It's not really representative of the market at all. In my opinion, anyway. If you look at the S&P 500, for example, that's the top 500 stocks. It's a lot more representative of what's going on out there. And the dive, frankly, is a lot more than what it was before, which we've gone through at the beginning of the 2000s. And here's 9/11. 9/11 happened right around here, and that's when the market really continued diving. If you look at the NDX, you can see 9/11 right around here or so. So the bubble already burst when 9/11 actually happened. So 9/11 was not really responsible for the bubble. It was the bubble in the tech sector or the internet sector that really created that kind of a dive. These are all really interesting factors right now. You can see that the NDX lost half its value. S&P 500 lost basically half its value. And people are talking about the Dow Jones Industrial Average, which didn't lose quite half its value. If we are to lose half our value, we're to go down to the 7,000. Now, which looks like a support level, by the way. Let's go ahead and mark that right around here. That's about 50% decline. This is a global crisis. It's all over the world. A lot of banks, a lot of stock markets are diving a lot more than ours. There's a serious crisis all the way from Iceland to Russia to Brazil to China, India, you name it, whatever market it is, they are diving. And it is basically a global panic, crisis of confidence. If my neighbor comes up to me and says, I want to borrow $10, I have to have confidence in the fact that he's going to give me back the $10. If I don't have confidence in him, I won't let him borrow the $10. Now, what happens is that there's a whole cycle of this. People don't have confidence that they're going to have a job, so they stop spending money. People don't have a confidence that they're going to be able to pay for their mortgage, so they don't spend money. If you don't spend money, if you don't go to the restaurant anymore, the restaurant owner doesn't have any money anymore, and and it moves that way. Same thing with banks. If banks stop lending to each other, everything, the whole system absolutely stops, and our system is based on confidence. And when we don't have confidence, of course, it calms down. I think that our government should work on restoring confidence, and not in self-responsibility, and not necessarily on bailing out banks. I won't go into politics. It's not my place. We are coming up on elections. It is driving me nuts to see all these commercials. So many of them are false. So many of them are really, truly scary. I think that some of the commercials are extremely scary for business owners, extremely scary for investors, and extremely scary for traders. It is becoming illegal to lose money. It's becoming illegal for asset values to come down. People have this preconception that house values should always go up. No, a house is an asset. It's an asset that's negotiable. Whenever it's negotiable, it can go up, it can go down. Stocks are the same thing. They're negotiable assets. They can go up, they can go down based on perceived value. Now, your choice. You can be an investor, or I'm sorry, not even an investor. You can be someone that believes that asset can go down, or you can be a trader. And when you're a trader, you understand that assets can go up and down, and you're able to take advantage of these swings. You're able to go short. You're able to go long. It depends on what you think is going to happen. By the way, I talked about this last week. This is a crash of '87. You can see that after that, the market recovered by quite a bit. So it's really not that big of a deal. I want to show you weekly, Dow Jones on the weekly basis, and I want to show you daily. And the reason why I want to show you daily is because what we have right now is a bottom. Now, there are two types of bottoms. There's the bottoms that bounce, and there's the bottoms that fall out. Bottoms that fall out basically start another trend. If you see this one as a bottom, for example, the market could have bounced back up, or the market fell apart after that, and fell apart quite a bit. I think that's basically what we have right now. Is we also have another bottom, and I think that more than likely the trend will continue down. Frankly, I thought that the market was going to recover. I saw these higher bottoms over here, and I saw this, and I thought that the market was going to start doing this. But instead of breaking this resistance level, the market fell apart. And if it falls apart, if it breaks this, we are going down. This is scary, of course, but it's only scary if you are frozen, if you are a deer in the headlights, if you believe that when the stock market is going down, you should freeze. You should not freeze. You should take advantage of it. It's an asset value that goes up and down. It's the same reason why you buy and sell cars. It's the same reason why you buy and sell anything else in life, because it's an asset. Now, people's mentalities is that assets are not supposed to come down. They are supposed to come down. That's capitalism. That's market. Take advantage of it. How are we going to take advantage of the market coming down? Let me go back to the S&P 500. S&P 500, here you go. You can see that the support level right here, right around the 850. You have spiders. Spiders are an ETF that mimics the S&P 500 100%. You can short the spiders. That's SPY. You can short the QQQQ, which is the NDX. You can short the diamonds, the DIA. You can go long some of those ETFs that mimic the market. You can go double. You can go double long on a short ETF. For example, QID. QID is an interesting ETF that mimics the NDX, but it mimics it double short. Anyway. That's my plan for this week. I plan to take advantage of the market. I plan to trade. I plan to not be a deer in the headlights, and to take advantage of assets that go up and down in value. If you have any questions or any comments, email me, support@chogantrading.com. Visit our website where we give the daily advice. Have a great night. Take care.